Well, good evening, VV Nation. Ron Wheeler here, manager of options trading, and it is my pleasure to bring you tonight's special presentation, Creating Income as an Investor to Beat Inflation. Well, if you've read the news in the last 2 years, maybe you've gone shopping, if you've bought anything in the last 2 years, what have you found? Well, you found that inflation is the headline. I see an article here, swapping fresh for frozen. Consumers struggle to afford groceries due to inflation. This is just recently about earnings. CEOs say they're raising prices. Great, more inflation. Cutting costs as inflation dominates post-earnings conversations. High inflation disrupts retirement savings strategies. What you saved, what you accumulated, it may not be enough if inflation continues. And what's worse is the market is not cooperating in 2022. It's much easier to beat inflation if the market's going up 20 to 30% per year. But if the market's down like it is in 22, not only are you not beating inflation, you're losing even more because your buying power is less. So let's talk about income. What is income? How does this relate to beating inflation? Well, income, very simply defined from Merriam-Webster, is a gain or recurrent benefit usually measured in money that derives from capital or labor. Now, the key part of this is recurrent benefit. We go to our job, we get paid a paycheck. It's a recurrent benefit. It always comes as long as we're working. If we're not working, we need to find a way to create income. Or if we are working, the best thing that we could do is create additional income streams. Now, when it comes to investing or trading, what is income trading versus what I like to call regular trading? Because if I buy Apple at $155 a share and it goes up to $170, well, Ron, can't I use that for income? Well, of course you can. But income trading is all about probability. So let's talk a little bit more about income trading versus what I like to call regular trading. So to do this, I'm going to use a combination of tools and one of the most powerful indicators you will ever have as a trader or an income trader. It's called hindsight. I'm going to go back and show you what a regular trade looks like and what a income trade looks like on a particular stock. So first, let's actually get a stock that we can work from. Let's start with VectorVest. And to do this, let's go to a market timing graph first. So timing, we're going to go to market timing graph, and let's go ahead and expand this out. Now, the first thing I want to do is I want to take a look at some of our timing signals. Let's first look at the confirmed call, our most conservative, longest timing signal we have. So if I take a look, it looks as if our last confirmed call came on April 12th. Now, I typically like to use a shorter timing signal like the DEW, but either way, those were both down right around that time. Now, what I like to do is I don't like to do back testing from the start of something. I like to just choose random dates in the middle. So using the power of hindsight, let's do something that is going to give us some very mixed results. So what I want to do, let's switch to a 6-month graph, and I'll choose a date that I know in hindsight would probably be a very bad time to open up a campaign of bearish stocks. How do I know this? Because if I'm looking at the graph now here in July, I know that 613 was almost the low. Now, why do I want to use almost the low? Because you would have looked at this day, and chances are you would have saw it coming down below support, and you would have probably felt a little bit more comfortable about placing some bearish trades. So let's use June 13th as our basis point. So the next thing I'll do, let's go back into VectorVest, and let's go to our Unisearch tool. Now, I'll pick a scan that's a good shorting scan. How do I know it's a good shorting scan? It's one that I've used a lot. So under Search as Short, let's choose IG Plungers. It's one of my favorite shorting scans. I love stocks that are not very good right now, bad RTs, and then also have industry group confirmation that they're very weak. So let's use IG Plungers. Now, I'll go back and I'll choose the date of June 13th. So July, let's go to June 13th, which was a Monday. Let's click OK. And let's go ahead and run a search from June 13th, 2022. And let's see what comes up in the scan. So run search. And here's my list of stocks. Now, obviously, they're all sell recommendations, of course. These are very weak stocks. So the next thing I want to do, since we're doing this in hindsight, I want to do a quick test. I want to see how well these stocks have performed over time. So here's what we're going to do. I'm going to go up here where it says quick test all. And I'm going to specify a couple things. Number one, you can kind of see the results right off the bat are not very good, right? This is a shorting search. So 17 winners is actually bad. We don't want the stocks to go up. Green is not good for us. Red is good. So let's do this. I want to be a little bit more specific because I want to work this into the options trading. So what I want to do is I'm going to change this from 6/13 to 7/22. I'm going to change that date, not too far back. I want to use, really, just last week, July 15th. Why July 15th? Because that is the third Friday of the month, and that's when your options for July would have expired. So if I was doing an income options trade on June 13th, I would be setting it to expire on July 15th, giving me the right time and the right expiration. So let's run it there. We'll go ahead and click OK. And really, it didn't do a whole lot better, obviously. 17 winners, 3 losers, which in reverse, because remember, we want red. Green is bad for us when you're going short the market, right? So not good. Well, let's take a look at a trade in particular. Now, a trade that I'm familiar with is coin, because I've done a few trades on coin in the last 60 days. So let's take a look at coin. From here, let's look at a graph. And again, we're going to be doing this in hindsight. So let's take a look at a graph of coin. And this is what it looked like. So let's go back to June 13th. June 13th is right about, oh wow, let's zoom in a little bit closer. June 13th was basically the low of Coinbase. It can't get much worse than shorting a market right at the low. So let's talk about trading, income trading. What's the difference here? All right. Well, the first thing is, let's assume that you're like every other trader out there, right? You want to place a trade because you think that Coinbase is going to go lower. So let's take a look. On June 13th, Coinbase, and we're just going to use the last price. The last price of Coinbase was $52.01. Now, I'm going to use our software Options Pro because it allows me to do some options trading. It shows risk graphs, and it shows a lot of the good analytics that I can use to illustrate these points. So I'm going to switch over to Options Pro real quick. And you can see, here's that chart of coin. Now, the chart in and of itself is not the thing here, but on 6/13, you can see that we had a low, and that was really the low, really up until now. I mean, we went down, it looks like we made a new low on 6/30. So if you would have timed it perfectly, if you would have shorted the stock on June 13th and got it right off that low on June 30th, you might have made money. But let's assume that we would have shorted the stock at 52.01 on June 13th. So I'm going to open up what's called a risk graph. Now, risk graphs are normally used for looking at profits and losses of an options trade. But instead of an options trade on this, what we can also do is use this to show a stock trade. So let's click on Edit Spread. I'm going to go ahead and remove my option leg, and let's do a stock leg. Now let's sell 200 shares of stock at $52.01, the price it was on June 13th. Click OK. Now, if I look at this, here's what I'm going to find. I'm going to find that had we done that, this trade would be down $3,782. Now, hopefully, you're using a good package like Profit Locker Pro and you wouldn't have suffered a loss like this, okay? But had you just stayed short on Coinbase, right now, you would be down $3,782. Now, I know what you might be thinking. Well, Ron, I wouldn't do that because of this, and this. Well, let's take all that aside. Let's just say you thought the market was moving lower, you thought the stock was moving lower, because that was a point in time I chose right when the market reversed. All right? Now, the problem with a trade like this, This is what I call a zero-sum game. And I know that that's not the technical mathematical explanation of zero-sum game, but work with me a little bit. It's called a zero-sum game. If I went out there and I simply, let's say right now, I bought 100 shares of Coinbase. Well, it's zero-sum. The only way you make money on Coinbase is if the stock goes up. That's it. If the stock stays sideways, you don't make anything. In fact, you would lose your commission. If the stock goes down, guess what? You still lose. It's not going to make you any money. Okay? So that's a zero-sum game. That's a trade. That is not a good source of recurrent income because you absolutely have to be right. Now, let's say that maybe you're an options trader already. So you would say, Ron, I don't buy the stock or I don't sell the stock. I would actually buy a put there. Okay, let's take a look at that next. So let's go back to the graph of Coinbase. And again, on July, on June 13th, let's say the stock again was about $52 a share, right in that area, 51.02. Let's say that you would have bought a July expiration $50 put, or even a $55 put if you wanted to go a little bit more in the money. One of the cool features of Options Pro, I'm going to go ahead and right click, add study, and there's something called Options Replay. So let's go ahead and do this. I'm going to say we're just going to simply buy a put. Click OK. Now I'm going to take this from June 13th. So what this little line here says is I am going to buy a July expiration. You can kind of see it in the little pop-up there. Buy one coin July 15th, 2022, $55 put. Well, at $55, you can see that this trade also didn't make money. In fact, even when it came down and made a new low on June 30th, that trade still would have not made money. And realistically, it doesn't matter. If you'd have done a 55, maybe you'd have done a 50 instead. Regardless, that trade is a loser. Okay? So the problem with simply buying an option is that buying an option in most cases actually is not even a zero-sum game. Here's what I mean. Let's open up another risk graph on Coinbase. Now, Coinbase is down $3 today, but it's been running pretty good. So here's what we're going to do. Let's assume that, and I don't care whether you buy a call or a put ultimately. Let's go out there in August. We'll just buy one $71 call. All right, now that call is going to cost you $10. Now, if the stock moves up, you're going to make money. If the stock moves down, you're going to lose money. But the problem with buying an option is, as time goes farther, and I'll zoom in a little bit on this risk graph. Now, what I'm going to do is I'm going to add a second line to the risk graph. This dashed line shows me how much money I can make on Coinbase. Let's say Coinbase goes up to $75. If Coinbase goes to $75, I'll make $240 in this trade. It's a $1,000 investment, and I'm going to make $240. Now, that's great if it happens today. But what happens if it goes to $75 on, let's say, July 31st? So using Options Pro, I'm going to move this forward, and I'm going to project what the profit and loss would be on July 31st. What happens is, as the option gets closer and closer to expiration, what you're seeing here is now it's $75. I'm only going to make $66. As an option gets closer to expiration, it loses value. Ultimately, what becomes of this is you're not really going to make a significant amount of money on Coinbase unless the stock goes over $81 a share, because at expiration, this is what the stock has to get to for you to make any significant money. So this is not what I would call an income trade. This is just a, air quote here, regular trade. If it goes up, you make money. If it goes sideways, you lose. Even in the case of buying a call or even buying a put on Coinbase, it has to go up even more for you to make a significant amount of money. But let's separate this out now. What exactly is an income trade? Well, here's what an income trade is. An income trade is something that gives you probability. I want a trade that even if market direction is wrong, I still have a shot of making money. So let's do this. Let's think about income trading and let's set up an income trade for coin. So let's go back to the graph of coin. Now, at the time, and I'm going to use another feature here called replay. So I'm going to move this graph back just so all we can see is June 13th, right there. And I'll even remove this guy here. So remove. And now all we got is our graph. Now, the idea here is to create a trade that is not a zero-sum game. I think, ultimately, based on market timing, that Coinbase should continue to go down. Now, what I want to do as an income trader is create an opportunity where if it goes down, I can be profitable. But if it goes sideways, I can still be profitable. Or even if it goes up, I can be profitable. Now, I'm going to give you some basics of how we set up our income trades. So what I look for is first off, selling an option. I don't buy options. I sell options as my primary trading tool. What I want to do is in a bearish market, I want to sell a call. Why do I want to sell a call in a bearish market? Well, if you've ever traded options before, if you buy a call and the stock goes down, what happens? You lose money, right? If you buy a call that's a bullish trade and the stock goes against you and goes down, you lose money. Well, I want you to reverse that. If you were to sell a call and the stock goes down, you make money. So in a bearish market, we sell calls. Okay? Now, how do we know what call to sell? I can't teach you all of the nuts and bolts here, but I'm going to give you a couple hints. Number one, we like to sell options that have probability less than 40%. So I'm going to click on an option chain here, and I want to show you a couple things. Options have a built-in probability. In Options Pro, we call this an ITM. Now, the ITM in our world as an option seller gives us the probability of losing money. So if I were to sell a $68 call on Coinbase, I have a 54% chance of losing money because that means there's a 54% chance that Coinbase will be at $68 on the day the option expires. If I go down there and sell, let's say, a $74 option, I have a 45% chance of making money. Why? Because there's only a 45% chance that Coinbase will be $74 or above at expiration. So here's what we're going to do. I'm going to do, again, the power of hindsight. Let's take this option chain, and I'm going to go back to our trade date of June 13th. Now, on June 13th, Coinbase was trading at $52 a share. I mentioned that I'm going to use the July option. Now, what I want to do for this is I want to take a look at the options. And what my goal is, as I mentioned before, is I want to sell an option that has less than 40% chance of failing. So I'm going to look here at my ITM, and I can see that I can do anything from 60 all the way down. Now, what my goal as an option trader is probability, but then also risk. You can get so obsessed with probability, you can place a trade that might only make you $100, but can cost you $10,000 if you lose. That's not the way to good trading here. So what I want to do is I want to look for what is the lowest probability I can sell while still maintaining a good risk and reward ratio. Well, I ran all the numbers. 65 and 70 actually worked out pretty well. And just so you know, here's how this works. So I start with options that have lower probability. So as you can see, $65, $60, all of those options are less than 40%. Well, let's give ourselves more probability. So I'm going to start down even farther. Let's start at 70 and 75. Now that looks great, right? 23% chance of that trade failing. Well, here's the problem. When I crunch the numbers of a bear call spread, because this is what we're going to do, this is what I find. I find that trade only has a $780, now I'm doing 10 contracts, a $780 max profit, but a $4,222 loss. Now, the problem with that trade is simply this. If I take the loss into the max profit, I have a risk to reward of about 5.4 to 1. That's not good. I like my risk rewards to be under 5 at a minimum. So now, let's keep looking at probability and let's go until we can find the most probable trade with an acceptable risk reward. So instead of selling a 70-75, let's try a 65 and 70. Now, do you see the difference? Take a look on this trade. My maximum profit is 1,000. My maximum loss is $39.50. If I crunch the numbers, that trade has a 3.75 to 1 risk to reward ratio. Now, I know what a lot of you would look at this and you might say, well, that's still a lot. I mean, I make $1,000 and I lose $3,900. That's a problem. Well, you're not going to lose $39.50. I've been doing this for over a decade. I've never suffered a max loss. The reason why you will never suffer a max loss is because it's very simply. If I do a 65-70 spread, if Coinbase trades over $65, I would simply exit the trade. Now, just to illustrate this, I mentioned that we would exit if the trade got above $65 a share. What I want to show you is what the actual loss on this trade would be if the stock were to rise above $65 a share. So as you can see now, I've got the stock price set to $65. My real profit and loss on that trade would be $890, not that higher amount. So you would not lose that higher amount as long as you manage the trades properly. It's very easy to manage these trades. Now, let me show you back in Options Pro. We're going to use that same tool that I showed you earlier. Let's go back to a graph of Coinbase. I'm going to right click. I'm going to add study. We're going to go to Options Replay. Now, we're going to do a spread called a bear call spread. Okay. We're going to move this back to June 13th, which actually I already had an up right there, June 13th. Now, I'm going to right click. We're going to do a $65 and a $70. Now, at the time of the trade, the premiums were $4.30 and $3.25. And again, you can get that using your broker software or anything that will give you historical data. Click OK and take a look. Now that trade, there was some times where it looked like right off the bat, you might have been down a little bit. But this trade, and let me zoom in a little bit more. The key is, in order for us to lose money, we have to get over $65 a share. It's close. The high of that day right there was $64.09. And then it started moving back down. And what you can see is you would have been out of this trade before expiration. But even if you had the trade until expiration, you would have made money. Now, this trade got close. Our short strike was $65. The trade reached a high of $64.09, so that's very close. But even though this trade ultimately at the end of July went nowhere, you still created income. This trade made money even as it went nowhere. And we never hit $65. We never would have had that loss. The most you would have been down on this trade at that point would have been about $89. It wasn't a significant loss. In fact, it was a gain. This is income trading, where we still made money even though we did not get direction right. All right, so here's what I want to do. If you're interested in having me help you and lead you hand to hand, I'm going to tell you about an opportunity you have with the Options Paycheck experience. If that's not something you're interested in, I want to thank you all for presenting or seeing my presentation tonight. It was a pleasure showing you this information, and I hope it can be useful to you as you go forward. But for those of you that are looking for how to implement this into your portfolio, let's talk about the Options Paycheck experience. So for those of you that are interested in having me take you by the hand to install this into your portfolio, In 2022, we relaunched the Options Paycheck to the all-new Options Paycheck experience, and this is the most comprehensive program for generating consistent income using option spreads, even if you've never done this before. Our clients who've taken this course can make on average of 3% per month. If you're a little more active, you can even do better. The Options Paycheck experience is the only implementation program of its kind that teaches the secret to generating consistent income with options. And we're going to show you exactly how to find, set up, and manage the option spreads so you can safely generate income in any type of market condition. So after going through this experience, you're going to know exactly how calls and puts work with all those fancy terms, so you no longer have to fear options. We're going to give you clear signals telling you whether to place a bullish or a bearish trade and when to place no trade. You're going to be able to quickly identify the stocks that make the best candidates for your option income trades using a rules-based approach. This frees up time in your life. You're going to set up an income trade that can give you up to a 70% or better success rate. And again, even if you've never traded options before, you're going to have a trade management game plan in place prior to placing your trade so you know how to handle any situation the market throws at you. You're going to be able to confidently enter and exit trades with your broker, whether it's your first time or you've done 100 of these trades. And you're going to implement a system that's going to help you safely and consistently generate income. Now, the course itself is broken down into 8 modules. Every module builds upon itself with the one overwhelming or overriding goal to create consistent income. And if you're worried that maybe it's going to be too much, maybe you won't remember a detailed step, well, don't worry. We have a step-by-step checklist that'll take you through every step from market timing all the way down to broker activity. You will have a step-by-step mechanical process that you can follow. And if you're still worried, this course has a 100% money-back guarantee. As long as you've come to the classes or watched the recordings, done the assignments, if you're not satisfied, I will gladly give you a refund. But remember, the key is you actually have to do the class. Now, that's that 3% per month, 36% per year. So again, I want to share a little bit about some of the trades I've done this year just to show you that even in a year like 2022, it's possible. So I want to share with you a couple things on the screen. First off, take a look at the P&L, $14,191. Now, I'm personally trading $100,000. I could actually trade a little bit more contract position, but I like to keep my risk relatively small. I'm risking on average about 1.6% per trade. You can risk in certain instances all the way up to 3% if you'd like. I personally choose to keep my risk smaller. With that $100,000 in capital, I have about a 14% return at the end of June and into July. Now, if you look at the breakdown of this, you can see that each month, with the exception of April, I'm generating that consistent income. And when the drawdowns do come, they come small. You're not going to be giving back all of your gains because of 1 or 2 losing trades. And if you break it down even further, you can see that towards the bottom, I've mainly been doing call positions this year, which basically means that I'm betting the market will go lower. And I've kind of sprinkled in a few bullish positions as well. Overall, about a 71% win rate. And again, based on my very small risk of about 1.5, 1.6% per trade, I'm up around 14%. And that's only one trade a week. You can do a lot more even if you implement stocks to this. That's the beauty of what we can accomplish. So again, the Paycheck course is perfect for you, our all-new experience, step-by-step training to go from option basics to a full, complete income-generating system. Now, to make it better, we're going to throw in a few bonuses. The first bonus is what we call the Mastery Package. This is going to include module-by-module mastery sessions. Each week, we're going to do 2 mastery sessions that are live. This is going to help you answer any questions that you may have along the way. We also have a weekly Q&A on Friday. This is going to be yet again another opportunity for you to get with us, ask questions. We can show you different things in the software if you need. cover any trades that you're looking at, an opportunity to meet with us to discuss the concepts. We have a private online Facebook community. You can join that, get some peer-to-peer support. We also post on there as well. That's also how we do ongoing support. So after the Paycheck course ends, you will still be able to go into your Facebook community, ask questions, and we do monthly Q&As. We also have a private dedicated email for the Options Paycheck. This does not get shut off. I still have clients that took the course in 2017 that email me from time to time. You'll also get access to both VectorVest and the Options Pro software. The important caveat here is if you already have a VectorVest subscription, we'll give you the Options Pro. If you're on a trial of VectorVest, we can extend your trial out through the course. You will get the software packages that you do not already have. Now, the second bonus I think is the best. This is the implementation month. This is a 2-month-long course, and we'll get into the calendar here in just a few minutes. The second month is implementation. We give you live trading sessions. Now, those sessions are the same sessions where I showed you my results earlier. Those trades were placed in those live trading sessions. You're going to get access to those. You're going to see us implementing the process, going through the routine, finding market timing, finding stocks, finding the options trades, and not just giving you advice. We're going to do a trade on Apple. No, we go in there, we actually set the trade up, I show you how it's done, we talk about stops, we talk about profit taking, so it's the complete package. Now, for those of you, of course, that are going through the Paycheck, this is new to you. So we have 2 office hour sessions a week. Again, this is a place where you can come in, we can discuss the trades of the week, I can take a look at things that you're doing, maybe you have questions on a trade that you're setting up. It's, again, an opportunity to get with us to get you help where you need it. So that's the second month. So the entire Paycheck experience is that 8 training modules, training videos, checklists, cheat sheets, quizzes, slides, the mastery package, the implementation month. Add all that together, you're looking at a value of $44.80. However, to make it a little bit easier, if you need a payment plan, we do offer a $495 upfront cost and then 2 additional payments of $495. Or you can sign up for our $12.95 one-time payment. But to make it a little more enticing for you, since you're watching this strategy of the week, I want to reward you for that. We can take that down to $9.95. So if you're interested, $9.95, order before Monday at 6 p.m. Eastern Time, and you'll be able to get this in this cheaper early bird price. If it's interesting, if it's something you want to do, go to www.optionspaycheck.com and get yourself signed up. This is the most comprehensive income options course there is. Now, what happens if during the course you miss a live session? Well, no problem. If you miss a live session, they're all recorded. So you can go back at your leisure, replay the recordings as many times as you need to, and make sure that you capture those ones that you miss. Now, when are the live sessions? Well, the Options Paycheck curriculum is over 2 months. We start on August 2nd at 5 p.m. with a welcome session, just to give you some details about how the course is laid out and what the plans are. Then, as you can see, through the month of August, this is your learning month. This is where you're going to learn all 8 of the modules, and then you're going to have 2 mastery sessions a week that cover each module as we go through the learning. We also have kind of a catch-all Q&A on Fridays at noon Eastern Time. Again, 3 sessions a week where you can ask us questions. We can go through the materials, the handouts if you need to, anything that you're still struggling with. So if you can't make one of the sessions, there's 2 other sessions that you can make. And remember, they're all recorded. Now, the second month, we talked about that being the implementation month. During September, we do live trading classes on Mondays, 11 a.m. and 2 p.m. Eastern Time, with the exception of the second week of September where the holiday is closed on Monday, Labor Day. We'll do that on Tuesday. These are your opportunities to get in there with us, our coaching group that we run, the Ultimate Retirement Solution, to watch how we implement this system. Now, because you're newer, and I understand there may be questions, seeing how the trades work, or as you're implementing on your own, you may have some questions for us. Well, we have 2 office hour sessions. Tuesdays at 5 p.m., with the exception of the second week where we have it on Wednesday, and then finally Friday at noon Eastern time. I like doing that Friday noon Eastern time because it's also an opportunity for me to go in there and actually find more trades with you, to really reinforce implementing this into your portfolio. I don't want you just to learn options. I want you to take advantage and actually place trades. That's our goal for the 2 months of this option paycheck experience. Some of our clients who've gone through before, like Cheryl, I've really surpassed my expectations. I don't need the money back guarantee because I tripled my investment. Bruce H., who grew his account from $100,000 to $452 in 3.5 years. Frank, after taking the course, I already have a profit of $7,300. Before the course, it was a crapshoot. Now I believe in the options trades I'm doing. Cam made back his initial investment so many times over, even though it's a small part of the portfolio, probably the most profitable. Hugh had 43 trades, his first 43 trades with 38 winners. He's up $27,000 in 4 months, having more fun, more confidence, and what I like the most out of that is more free time. And Jake, I finally found a method of making consistent winning trades with a high probability of success. These are people who are actually doing it. It's not about theory, it's about actually getting out there and creating income. So again, if you're interested in the package, the Options Pro or Options Paycheck Experience, go to www.optionspaycheck.com. Sign up for it today, $9.95 till Monday at 6 p.m. Get yourself started. It's not too late to create a second or a third income stream. Thanks again for attending tonight's special presentation. I hope you got some great value out of it, and I hope to see all of you in August and September in our Options Paycheck Experience. Good night, everybody.